This is your LMAX Exchange Technical Update for Monday, October 2nd, 2017. Euro dollar. So the euro has seen a bit of a bounce in the latter portion of last week, although the market is pressured to the downside right now following a break of a head and shoulders top. And so rallies are expected to be well capped into the 119 area ahead of the next downside extension through recent support last week's low, which comes in at 17.18 about, and down towards initial support initial key support at 116.63. That's the low from the 17th of August, below which would expose a measured move extension towards that head and shoulders objective at 115.55, which also happens to coincide with the 100-day moving average. Sterling dollar. Cable is pulled back from its recent 2017 high, and the breakdown that we saw in the previous week below 34.50 exposes a drop towards the 32.50 area. That roughly coincides with a previous August peak, which is resistance turn support around 132.70, and so there is risk for deeper setbacks over the coming sessions. Overall, however, this is a trend that is shifted back to the top side, a bullish trend now, and so dips are expected to be very well supported, and looking to buy dips for a higher low somewhere on this latest drop is the preferred strategy in favor of the next upside extension back towards and through the 2017 high up in the 136s. Dollar yen. Dollar yen is pushed back up above some resistance at 111 over the past several days, and this leaves the market thinking about a retest of the yearly range highs up in the 114 to 115 area. However, at the same time, the market has been very well capped on rallies in 2017, and there is risk for another downturn and break back below 111 and ultimately down towards the range lows and the recent 2017 low at 107.32. So right now, an unclear directional bias with the market in the middle of a key range, but look for a break back above recent resistance, which comes in around 113.26, or back below some recent support down towards the 111.47 area to give a clearer indication of the next move for dollar yen. Euro Swiss. Euro Swiss has been consolidating over the past several days, although over this year we've seen the market break out to the top side, and the trend is now focused on pushing higher, with the market seen eventually back above the recent 2017 high from the other week at 16.24, ultimately up towards that major barrier at 120 further up, only back below 112.60. This level here, that support going back to the 18th of August, would negate this outlook. Aussie dollar. Aussie has been under quite a bit of pressure of late, with the market recently rallying up to a plus 2-year high above 81, but showing that it's unable to comfortably hold up above 80. And so if we see a breakdown below 78, it could open the door for an acceleration towards a measured move back into the 74 to 75 area. Dollar CAD. Dollar CAD has been in the process of correcting out from recent plus 2-year lows, that 2017 low that was seen in early September at 2062. There's room now for this market to continue this correction higher up towards next key resistance, which comes in at 127.80. That's the high going back to the 15th of August. Any setbacks now should be well supported as this correction plays out after we had already seen an intense decline in 2017. Kiwi dollar. The New Zealand dollar has been showing signs of being very well capped into rallies since topping out back in July at a plus 2-year high above 75. Recently, the market has been well capped above 74, and a lower top here would be confirmed if the market established back below support, which now comes in at 71.32. That's the low going back to the 31st of August, and a break there would expose also a fresh downside extension towards a retest of the 2017 low in the 68. SPX 500, same story here with the S&P 500 continuing to push to record highs. The market now focused on the next key test of 2550, psychological mid-figure barrier, and any setbacks now should be very well supported, with only a break back below 2487 taking the immediate pressure off the top side. Again, until then, the trend is firmly intact here, and the focus is on fresh highs towards 2550. The market is overbought on a longer term basis, but there have been no signs of a reversal yet, and at a minimum, a break and even close below 2487 would be required to suggest that the market is right now, the pressure has been taken off the top side. Ultimately here, the market would need to really establish back below 2400 for it to suggest a significant bearish shift in the structure. Gold. So gold has seen the market pull back over the past few weeks, and the market has now come back down below 1300. But overall, as we look at the chart going back, setbacks have been very well supported in recent months, and so setbacks are expected to continue to be supported with a higher low sought out above 1250 in favor of a continuation of gains back through the recent 2017 peak from early September at 1357, 1358, and towards a break of the 2016 high at 1375 further up. Only back below the 1200 area would compromise the constructive outlook for gold.